Welcome everyone to our Market Insights evening. In the past, we've enjoyed the option of welcoming you to a social event, but as the world has changed and we're now more nimble, it's great to be able to come to you in a more convenient way and see you over Zoom. So thanks for being with us. Tonight was really a good opportunity from our business's perspective to reconnect with you and give you some insights into what we're seeing in the property market. There's a lot of rhetoric at the moment about the performance of the property market on both sides, being in the sales side of the business as well as in our leasing and property management space. So we brought together a group of our team today to give you a bit of an overview of what we're seeing. My name's Andrew McCann, and I think I've spoken to you all before about the market broadly. I'll speak about what Jellis Craig's seeing in the sales arena, and then Kristen O'Connell, who looks after leasing and new business in Richmond, will cover off on that market. Sophie McGuinness will cover the Stonnington market, and Sam Nokes is going to talk to you about the important changes that are finally coming into effect with the RTA changes come middle of this year. So as far as the market is performing in a new year sense, I almost said that we're post-COVID, but it doesn't feel like we are in a post-COVID environment, albeit I've just come from doing a public auction. So we had an auction on an evening in Malvern at 5 o'clock, which is a new form of selling for us. We've moved through the COVID period and seen the market really start to respond from that stage 4 of lockdown in Melbourne. One of the things that was most interesting to see was the way that the sales were spread in the first 6 months of this financial year. Our sales volumes in July were 300% up on what they were in the previous July, purely because Melburnians didn't go away on holidays and there was the fear and expectation of future restrictions coming into play. So we had a very strong pre-lockdown marketplace. September, a month where we're genuinely very productive as a real estate industry and business. The spring market was really shut down. We weren't able to work for 8 weeks. And then once we came out of lockdown and moved into an environment where we could start to see transactions and properties marketed again, interestingly, in December of last year, 686 sales for the Jellis Craig group versus 450 the previous year. So we have seen a lot of activity pre-Christmas. With that, we've seen reports of price gains. We've also seen reports of clearance rates being extremely high. The weekend just gone, Saturday the 6th of February, was probably the first test of the market for the new year, and we saw an 84% clearance rate. That's versus an 83% clearance rate at the beginning of 2020 pre-COVID, when arguably the market was as strong as it had been for 3 or 4 years. So we're surprisingly working in a very buoyant environment. Some of the changes that are in effect at the moment and that we are seeing is more flexible sales methods. So it's not as traditional as the market that we once knew. We're seeing properties sell in a much shorter time frame. 2 and 3 week marketing periods as opposed to 3 and 4 are now very much the norm. The property market does engage very quickly with new stock, and we're seeing the days on market come down. Jellis Craig's days on market reduced from being 28 in July to being about 19 in December. So a significant shift in the way that property is now being transacted. As a broad set, our expectations are certainly that the market over the next 2 to 3 months will continue to be a strong selling market. We had the privilege yesterday for a director group to see Cameron Cusher, who's the chief economist for realestate.com, and he provided some insights which I thought I'd share a few of the high level statistics that we heard about yesterday. Interestingly, realestate.com are reporting that 70% increase in traffic to their site. So there are now 70% more people in February this year looking on the buy pages of realestate.com versus a year ago. So there's an enormous amount of Australia that is considering its next property move. And a lot of those moves are, as you may have read or heard, to different marketplaces than what you might have anticipated traditionals look like. The Mornington Peninsula is currently showing the greatest gains, both in a price perspective. 10% is being reported in terms of price gains in the Mornington Peninsula for the last quarter. But the average amount of views on a property on the Mornington Peninsula is 6,800 views, which is almost 3 times the average views that we're seeing for properties in the inner east of Melbourne at 2,500. So it's amazing to see the amount of people that are shifting lifestyle, or at least researching and making those changes. The data shows that both markets like Geelong, regional Victoria, centres like Ballarat and Bendigo are also outperforming traditional marketplaces like the inner east the inner north, which are typical hotspots of Melbourne, from an eyeballs perspective. Now, clearly they're not chasing from a price point of view, but there are a number of people that are looking in those markets. So some interesting changes around lifestyle is going to mean some interesting changes in terms of the way that we see property sell over this next half year. As to when we come out of a restricted lifestyle, I think is probably a really big question for the market to answer. I think whilst we are restricted, households are saving more money than they've ever saved before. Interest rates are at all-time lows, and the affordability of money in the marketplace is giving purchasers more firepower, which is why we're seeing price gains. So there's certainly no surprises around the traditional levers to our economic market, which is a supply and demand drive. There's a shortage of supply of homes for sale, and there's certainly high demand. Some of the other economic factors that came through in reporting yesterday was that mortgage holidays, people that were on mortgage relief with the banks, is down from 11% to 3% now. So that affected change of people thinking that that might create some sense of a cliff for the property market. Will either be a soft landing or will have no effect at all, is now the new reporting. The expectations that unemployment would have had on changes to the property market, I think the early predictions that we might have seen unemployment hit 11%. That was downgraded to then 8%, and unemployment, I think yesterday was reported at 6.6%. So there are actually more people in work than was anticipated pre-COVID, and that effect and that key statistic, which often does have an impact on property prices, is now probably a moot point. So I think that the timing side of the marketplace at the moment is that it is a good time to buy property. We're not here to spruik it to you, but from an affordability point of view, banks are reporting that you can borrow money and fixed terms for less than 2% for up to 4 or 5 years. And that affordability piece is certainly driving aspects back to the market. I know the guys are going to talk to you about the rental market overall. There's certainly, when there's a strong selling market, sadly, that does mean that there's sometimes an adjustment to leasing and overall rents as tenants leave the leasing market and become buyers in a more affordable space. So we are seeing some softening in overall rents. But it's interesting that investors are coming back to the market. REA reported that for the last 8 months, there has been an incremental increase in mortgage lending from an investor perspective. So whilst there's a big drive from first homeowners, there's a lot of support in the new house and land markets for government grants and support to see the property market sustain. And there's a lot of people that are considering changes to their own circumstances. We saw pre-Christmas, a lot of families decide to improve their living facilities. And I say that in that they wanted more space. Their families found the restrictions of lockdown to be very challenging, and people have made the decision with good affordability and job security to make those decisions to improve their circumstances. So as far as the next 6 months go, I expect that we will see clearance rates remain fairly strong, and that's a 75 to 85% prediction. What you might find is that the number of auctions that are reported isn't quite as high as what it has been traditionally, and that's because we have learnt to see more flexibility in the selling method. Expressions of interest, off-market transactions and private sales is probably spreading the field a little bit more than what we've seen traditionally as a business. We might have been an 80% auction business. We're now about a 60% auction business, with the balance of those other sales being made off-market or via expressions of interest. So it's been a really interesting time. It has been a challenging time for our business on many levels. We're very proud of the work that the team have done to sustain that, and we are quite excited about what this year looks like. So it's an overall snapshot on the sales environment, the property market in general, and I'll hand over to Kristen to talk about what she's seeing in the Richmond leasing space.
Thanks, Andy. Hi, everyone. I'm Kristen O'Connell. Some of you I've certainly met across the last 12 months. I'll start with houses in Richmond. Across the last quarter, we saw house prices in Richmond stay relatively stable. Towards the end of last year, we did see transactions dramatically increase. We did see a low supply for large and quality homes, which in turn offered us an opportunity to lease a lot of property off market. So some of the slides that I'll show you today, you may not have seen online. 11 Stockade Lane, Richmond. This particular property was offered to a family that we knew who had sold their property in the outer suburbs of Melbourne. That leased for $1,400 a week off market. We had a similar result over at 5 Kennedy Street and 26 Chestnut Street, where those families rented, they'd previously been living in the outer suburbs of Melbourne, and we managed to secure tenants quite quickly. With 20 Lesney Street, you'll see the low supply on the market. It was somewhat a landlord's market, but sometimes it's not always that way. And even if the supply is in the landlord's favour, simply going to market isn't enough. And that's where the story of Lesney Street is interesting. This particular property spent an extended amount of time online with another agency. It was online for in excess of 6 months. We took the listing on in December, made quite a lot of marketing changes, including new photos, floor plans, and a slight price adjustment to meet the current market. We managed to lease the property within 2 days after canvassing our tenancy market, our tenancy database. The interesting feedback that we had from those tenants, and both the tenants that we took through had been looking for a rental property for a considerable amount of time. They had been looking across Melbourne, so multiple suburbs, including Paran, Armidale, all the way through to South Yarra and Richmond. The overwhelming response from both tenants was that one simply hadn't seen the property, and the other one saw the property, but based on the photos that they saw online, they didn't think that it was appealing, and they didn't think it was the home for them. Once they saw it, they fell in love with the property and snapped it up straight away. So it really tells a good story of making sure that your property goes to market with quality advertising and it's priced according to the market to ensure for a successful campaign. In relation to the current market in Richmond, we have seen an increase of the share house market return to Richmond, which is fairly typical of this time of year. Typically at the moment, we're seeing young share groups who are both studying and working, as well as professionals aged between 19 to 30 who are working full time. In relation to the apartment market, across the last quarter, we have seen rents down anywhere from 10 to 20%. However, there has been an increased volume of stock of around 25%. With that being said, transactions have increased since the start of January. We've seen that through these properties. In relation to 14 David Street, the rent's been down. This particular property leased at $450 per week in 2019. We recently leased this one for $375. So quite a drop, but once we priced it correctly, we were able to lease it. 115 Church Street, this is a brand new development. Through July to October, we saw the 1-bedroom apartments leasing in the vicinity of $420 a week. Since December and through to now, they're moving in the vicinity of $340 to $350. Most of the smaller 1-bedroom apartments in the area are renting in the vicinity of $350 to $375. Might go to the next slide. These two properties are quite interesting. We had these properties coming available at quite an awkward time, so into the end of December and the beginning of January. The strategy that we used was to market these properties competitively, so making sure that they went to market where we knew that we'd get the right level of interest. We put the properties online on the last business day before the Christmas break. The idea around that was to make sure that we got the optimum viewing time of tenants that were searching for property across the break, with an advertised inspection time on the second business day back. Each of these properties had their first inspection on Tuesday the 5th, and subsequently we managed to lease Dyer Street, Garfield Street, as well as Judge Street, which is on the next slide after the first inspection. Really, it was the aim in that was to minimise vacancy. Ultimately, each property was leased, and the overwhelming feedback that we got from tenants was to make sure that we had floor plans on properties. When we asked tenants why they came to each property, they said that the marketing was clear and concise, and they were able to see the size of the bedrooms online. Both Sophie and I and the whole team have seen that with an oversupply on the rental market for apartments, it's so important to make sure that tenants can see the property and know that their stuff's going to fit. Some tenants have even said to us that they won't go and look at a property if there's no floor plan. So in closing, my main advice at the moment, when there is quite a lot of stock online, is to have floor plans online with dimensions of the rooms. With that, I'll hand over to Sophie McGuinness.
Thanks, Kristen. As Kristen said, I'm Sophie McGuinness and I look after all of Stonnington. I certainly agree with a lot of Kristen's comments around advertising and that floor plan. Also that her Richmond market is probably very similar to what we see in South Yarra and Prahran. Obviously, Stonnington being such a huge municipality means that, I mean, South Yarra and Prahran is more relevant to Richmond, and Glenara's apartments aren't comparable to South Yarra. Toorak houses won't necessarily lease as quickly as Armidale houses, for instance. So over the last quarter of 2020, and even the first month or so we've seen in 2021, unfortunately, we saw an oversupply late last year, and prices were back about 12 to 20%, depending on the property type. After stage 4 restrictions easing and tenants returning to market with hospitality reopening, businesses reopening the CBD, we saw tenant inquiry improve daily at one point. Once hospitality reopened, we were seeing tenant inquiry levels double every single day. However, just as many properties as we were leasing and taking off market, more properties were coming to market, which we see through natural seasonal migration, and also tenants recognising that with the reduction in the average rent, they're moving out of what they're paying and relocating to something that they see to be a better value. So basically what's happening currently is that there's a big return in demand, but prices remain low and haven't necessarily recovered. In some segments, we've shifted from it being a tenant's market with an oversupply of stock to now being a landlord's market with many tenants looking at the same property and there not being enough properties available for them. So I'll start with South Yarra because I feel this suburb appeared to be the most negatively impacted from COVID-19, with the largest oversupply of stock I've seen in my time working in this market. Stonnington apartments as a whole were up 149% year on year, so this time to last year, so more than double what it was. South Yarra in particular, I had a look today and there's, for 2-bedroom apartments alone, there's over 1,500 South Yarra apartments currently for lease, so big oversupply at the moment. Looking at some examples in South Yarra, we had 66 Surrey Road here, which probably complements Kristen's comment about marketing and presentation. This we've managed for many years. We leased it 18 months ago at $680 a week. It was sold. The purchaser was an investor. We took it back to market using the same photos, but no improvements to the property or renovations were done. So the owner fortunately quickly revised the price back to $650, where it sat for some time. We were getting great inquiry levels. It was looking great online, getting groups through, but it wasn't converting to the application. So the owner decided for him, the best solution wasn't to drop the price anymore. It was to improve the property with painting, light fittings. I believe there were new blinds as well. And it was leased within a week at $650. So obviously, in order to lease the property, you can adjust the rent if need be, or it's taking it to market, quickly adjusting the price and then improving your property, because even pre-COVID, you can't expect your property to have natural growth without regular improvements to the property. Next example for a South Yarra apartment space, Sam, if you just click to the next one, we had 55 Darling Street here, which was a really tricky one. That actually went to market before stage 4 restrictions even started. What's interesting is this building, nothing in this entire building has leased in under 100 days. So it does take a little bit longer to lease. We believe it to be because there is communal laundries and not every apartment has parking spaces. So unfortunately, the owners, updated the presentation of the apartment internally, but the only thing that we were able to change was price. So what he had leased for previously at $520 a week ended up leasing for $395. So big price adjustment there. And as I said before, I think this South Yarra apartment spaces price-wise were impacted more than any other segment. Onto the other side of the coin, 7 Sudan Street and this high-end home space around Malvern and Armidale, it's probably been one of the most, popular products for the last quarter of 2020 and a little bit of this year. So interestingly enough, this was sold, I believe, just before stage 4 restrictions started, with a really long settlement. which meant we couldn't have access until the 1st of December. It was appraised at $1,800 a week, which is what the current market was telling us during that really tough period. But as we, headed through restrictions easing and November, we found that through our relationships with tenants and that tenant database, that we actually had a lot of tenants with a budget of $2,000 a week. So we ended up with a pre-market campaign, so sending the sales photos to the database, and then taking it to market. We had 18 inquiries within the first few days, 6 tenants inspected, we had 4 applications, and we leased it in under a week. So that's just showing at the moment how fickle the market is and how quickly it improved with tenants returning to inner city now that they could, enjoy the hospitality, entertainment, and also ready to be in the city a little bit more. Off the back of this, we were able to lease a house in Glen Iris off market. We ended up putting that deal together on Christmas Eve for $1,900 a week on a 24-month lease. So a couple of great results there. In the Armidale units, 2 on screen now, Watertree Road and Wrights Terrace, show 2 of the most popular products in market at the moment. So renovated villa units or houses with outdoor spaces. In 37 Wrights Terrace instance, the owner was living in there, and it was really important for him to not bring tenants through while he was living there. He didn't want to risk, transferring the virus or anything like that. So the priority for us and for him was to then minimise the vacancy period. Obviously, the longer it's vacant, the greater loss of rent. So the appraisal was $800 a week to $825 a week. He agreed to just go for $800. We had, I believe it was about 12 people through the first inspection, 5 applications, and we leased it from 1 inspection again. So it's about identifying, what's the priority? Is it, having the best rent possible and accepting potentially a 60-day vacancy, or is your priority to find a really good tenant as quickly as possible, still at a reasonable rent, just reflective of the current market? The next one here, Sam, if you could. Thank you. Malvern East is a very tricky suburb. In the apartment space, your tenant type is really students. And unfortunately, 2020 saw, I'd say, 100% of international students leaving the market. We also found that, a typical tenant type for this would probably be singles in their early 20s. And we saw that tenant type potentially move back home or into share accommodation where they could split the rent. So this was on market for quite some time. Many months I was speaking to this owner, and mid last year we were thinking $4 to $425. We ended up leasing this last week at $310. We're finding that students are now returning to market, as are single 20-year-olds leaving the family home for the first or second time. And what we're finding, if their application reads to not have enough savings or a low income to mitigate any risk to our clients, we're not only asking for a guarantor letter, we're asking for a parent to be on the lease agreement as a co-tenant. So just having to be really agile with our strategies to make sure we're getting good deals and protection for our clients. 12 James Parade is actually probably one of my more interesting results over the past month, because this is in the pocket of Malvern East where it's basically Chadstone and it's almost at Warrigal Road. Notoriously pre-COVID, this pocket always took longer to lease, typically 2 to 3 weeks longer than that city end of Malvern East. We took this to market at $900 a week, understanding that pre-COVID, potentially we could have got $950 a week. And we ended up getting 12 groups through over 2 weeks. And we ended up with 2 applications and leased it for $900 a week within 21 days. So that's a combination of the owners being realistic on price, presenting the home beautifully for every inspection. We got the best photography possible, and they also approved upgrades really quickly. So for example, this application was subject to an air conditioner being installed in the downstairs living room, which they arranged within the week. So a testament to the owners, taking the advice and also being really helpful on the other end. But also this property type is really uncommon at the moment in Malvern East. Every tenant was saying to me, I haven't seen anything this size in a long time. There's nothing else out there. So again, we're just having to be really agile with what is currently on market and what our competition is as far as what other properties are available. So again, it was a bit of a challenging 2020, but the last quarter of 2020 showed a huge improvement. And even at the moment, we're running in really high volumes, but other than that, it's business as usual. That seasonal high market, which is normally mid-January through to the end of March, we're certainly seeing that this year. So yeah, almost business as usual.
Great, thanks Sophie. Really great insights there into what's happening with the market. And I think one of the biggest changes that we're going to see this year is the Residential Tenancies Act reforms. Now, it might seem that we've been talking about these for a long time, and we certainly have. The discussion around this has been happening now for close to 5 years since they first launched the program to review the Residential Tenancies Act. And we were due to have this come in at the start of 2020. We're supposed to be in for July, and because of COVID-19, it was delayed. The main reason that it was delayed was that it's just simply the department that looks after these things, Consumer Affairs Victoria, just didn't have the resources to finalise the rollout. And so the government made the decision to postpone the delivery of that. And then as things appear to still not be quite good enough and for the resources to be available, the government ended up postponing again. And we now have a start date, which is the 29th of March, 2021. So just 6 weeks away now. The main part for the delay and the reason that things weren't moving along with the regulations, being the second part of the legislation, hadn't yet been released. And there were some really big pieces in there which we needed to be across to be able to move forward. And so I'll run you through those today. So just to briefly talk about what's already in, I think the most publicised change was at the start of 2020, which was the changes to pets in rental properties. So that's been in now since the start of Jan 2020. What we saw there was a quick influx of a lot of pet applications. Tenants now need to request to have a pet in the property, and the landlord cannot unreasonably withhold consent. And we saw an influx of applications very quickly, sort of between January and March, and then we really sort of haven't seen many since then. I think everybody who wanted to get one got one pretty quick, and it seemed to pitter-patter off pretty quickly. Although what did happen is we did have a couple of landlords who wanted to object to tenants having pets, and very quickly a body of law was put together around what was reasonable and unreasonable. And essentially, VCAT came to the conclusion that there's not a lot that they considered to be reasonable. We went for a property where the owner had allergies to pets and didn't want to have a pet in the property in case they wanted to move back. The answer from VCAT was that's not good enough. You need to be able to show us that you have a current intention to be moving back rather than just if you do. We had a property that had a rooftop terrace, and they got a German pointer dog, which is renowned for jumping, and it had a terrace height that was about 1.2 metres. And apparently that wasn't considered dangerous, and the property was considered reasonable for that type of dog. So not sure how low the balcony would need to be to pass the unreasonable test, but it obviously wasn't that high. And we had another one where the tenants had had a previous bad reference with having a pet in the property, but it was a different pet that they were having in this next property, and that was also considered to be reasonable. So we haven't seen any positive decisions where the landlord's been able to withhold their consent. So at the moment, it's very much if the tenant applies to have a pet in the property, there's not a lot holding back consent from an owner. In saying that, at Jellis Craig, we love to go and defend our owners and get the best outcome. So we're very much open to going and putting any argument forward at the tribunal and seeing if we can be successful. The other changes already in are mainly related to family violence and domestic violence in properties, and some additional protections for victims of domestic violence, which everybody I think who's seen those accepts that they're excellent reforms and really protect the protected person in the property. So the big changes that are coming this year, I'll just run you through in brief. There's lots of education coming out from Jellis Craig in relation to these. We'll be providing a lot of information, as will Consumer Affairs. But most importantly, all of our team are being trained on this comprehensively between now and the end of March to make sure that we're able to advise our customers about their rights and duties as and when those fall due. And rather than doing the death by PowerPoint and running everybody through every single one of 130 reforms and the about 80 pages of regulations, I will provide you with the information that you need at the time. So big changes. One of the biggest changes, I think, is compliance. Previously, there hadn't been any real compliance or safety compliance that was required with owners. It was all their choice. For instance, servicing your smoke alarms has always been your choice. It's obviously been a recommendation, always been your choice. Gas safety has always been a choice. And the government decided to bring in regulations to ensure the safety of rental properties for renters. And so it is now, from the 29th of March, it is now a requirement that smoke alarms are checked by a suitably qualified person once every 12 months, that an electrical safety check is done once every 2 years, and that a gas safety check is done once every 2 years, as well as having if you've got a pool at the property, having the pool fence complied once every 2 years. We'll talk about the cost of that a little bit later, but that is the biggest change. At Jellis Craig, we have organised through our safety provider to look after all of those obligations on behalf of our owner. There's a lot there. And it also falls into the disclosures requirement, where we need to tell tenants when those things were last done at the commencement of any tenancy or within 7 days of being requested. The other one, I think probably the most publicised one, and the one that irks our landlord clients the most, is modifications. It's been widely publicised that tenants are allowed to go into the properties now and do whatever they want by way of modifications. That's not quite right. The regulations did restrict that quite closely and quite tightly down to only a few things that tenants are allowed to do in relation to things like putting up picture hooks or painting. Tenants are able to do those things, but I think what is most important to remember is that anything that they do, and they ask permission to do it, they have to rectify everything at the end of the tenancy. So if the tenant does go in and they paint the house a different colour, it's not the end of the world. They are required to rectify that at the end of the tenancy, and we've got great controls for being able to make them do that now. So if anything, they've actually upped the power for landlords. Previously, if a tenant made modifications, getting them to fix it was quite difficult, whereas now there's excellent legislation and power provided to agents and landlords to get tenants to return properties in the condition in which they were given to them. Urgent repairs. There's been a few things added to urgent repairs. Those compliance requirements are now urgent repairs. So a faulty smoke alarm is now an urgent repair. Any air conditioning in the property has now been added as an urgent repair. Previously, that wasn't. And so there'll be some more pressures around that. Getting an air conditioning technician to attend to a property urgently is difficult. And any property manager knows that it's a fair negotiation with an aircon supplier or technician to get them out there within a day or two. They're very busy people, so we're quickly working to make sure that we've got a good list of air conditioning technicians to service those properties quickly if we need to. Bond claims is another big change. Previously, there was a 10 business day rule. If the landlord got the ability to make a claim on the bond within 10 business days, and outside of that, they might not be able to make that claim. That's been slightly tweaked now, where if the landlord does not lodge a claim with the tribunal within 10 business days of the tenant vacating, the tenant is able to just get their bond back. They're able to go to the tribunal. If no claim is listed, the bond is just returned to them quite simply. So there is now additional pressure around quickly doing final inspections thoroughly, but then getting to any disputes quickly and lodging applications quickly. So you might find that the next time the tenant's moved out, we are applying a little bit more pressure to our landlords around a response to whether or not they're wanting to claim something or list a matter against the tenant. And that's just because we don't want the tenant to be able to just get their bond back instantly. We want to make sure that we protect you as the landlord in being able to have access to those funds. The other one is the rent arrears notice to vacates. The government decided to implement a 3 strikes rule, but the government can't count, apparently. So it's 5 strikes. If the tenant is 14 days in arrears and we serve them a notice to vacate, if they pay, the notice is automatically retracted, and the tenant can have up to 5 strikes on the 3 strike rule for that. By the time it's their 5th time receiving a notice to vacate for rent arrears, at that point, that's enough, and we'll be able to get them out even if they do pay. But otherwise, if the tenant pays after a 14-day notice, it's automatically retracted. The good news is that on the 5 strikes, that is very much it. The legislation's written in a way that gives, again, landlords great power around that. The other one's prohibited terms. There are some prohibitions around what we're allowed to include in leases now, and that they especially are about indemnifying, tenants indemnifying landlords, and also some questions that we're not allowed to ask anymore. Anything that's prying into their personal finances too far is now outlawed, and also just any questions that are going to allow a landlord to discriminate for any protected characteristics. Where terminations are considered, The 120-day notice to vacate has been removed, and there's been some changes to the end of fixed term tenancy notice. The short version of that is that I just want the tenants out, not for any particular reason, but I don't like them and I don't want them to be there anymore. That the ability to do that now is realistically removed. There needs to be a substantial reason as to why a tenancy needs to end, and we'll again brief you on that at the time as needed. It is important to keep in mind that as we have always had a tenant database, for naughty tenants who've done the wrong thing, there is now a landlord and agent database that will be started. So for landlords who haven't done the right thing or agents who don't do the right thing, there will be a database for tenants to see those. So they are attempting to make that a fair system where there's a tenant database and a landlord database. And we'll be doing everything we can to make sure we keep all of our clients well and truly off that list. The last change, which is the biggest one, is minimum standards. So without running through all of the minimum standards, there's about 35 of them in the regulations. Some of the big ones, there needs to be at bare minimum a fixed heating unit in the lounge room. So some of our owners of those smaller units, around Paran, sort of $275 a week, that have traditionally not had a fixed heater in place, maybe they've got portable coil heaters and things like that, those now won't meet the minimum standard. There needs to be a fixed heater in the main living space as a minimum standard. And so a few of our owners will need to upgrade those relatively quickly, but I think most properties comply with that. A ducted system, of course, is fine. One of the ones that's going to require a little bit more explanation in a few VCAT cases to clear it up is ventilation and light. They are wanting to, they've set a minimum standard around light in bedrooms, where there needs to be a reasonable amount of light. Now, that hasn't been described, but what the annotations for that say is that you should be able to, in the middle of the day, read a book without the lights on in a bedroom. So for some of our apartments, especially around Yarra Street, Claremont Street in South Yarra, where they're quite tightly built and they may not have a window facing out, but it's a borrowed light bedroom, those properties we might find actually need to have modifications made to them. But there are some conditions in the regulations around permission through owners corporations can override that. So like I say, more to tell on that story later on once there's been some VCAT decisions to clear that up. Mould and damp is now well and truly a minimum standard. Any property that has a sign of mould or damp that's related to structural, so not from the tenants living in it, but structural, the property wouldn't comply with minimum standards and essentially cannot be let out. So any of those old terraces that have got the rising damp behind the front door, all of those will need to be dealt with prior to the next tenancy or within 2 years of the tenancy of the regulations coming in. And they're sort of the biggest pieces. So the last question is compliance going to cost me more? This is the biggest question we're getting from customers. And the answer to that is yes. Compliance for a standard property for smoke alarms, gas and electrical is going to be about $700 in the first year. And then it's about $350 in every year after that. That's an increase from $90 a year on smoke alarms. So that includes all of the compliance required. But we have done quite a good package deal with our clients, with our service providers around that, which will mean a lot of free call outs for electrical and gas work, which offset that cost later on in the year. There's more information coming out about that next week, which will fully detail what's included in that, what those costs are and how that's going to work for our clients. But really, they're the big questions that we're being asked in relation to the RTA at the moment. I didn't want to bore you with 130. We've already got a little bit over time, so I'll wrap it up there. But I do welcome anyone, if you've got specific questions, you are very welcome to get in touch with me at samnokes@jelliscraig.com.au. I'd be more than happy to answer any specific questions that you've got. And now I'll hand back to Andy to wrap us up.
All right, thanks, Sam, and thank you to Kristen and Sophie for giving us some really general overviews as to what we're seeing around the specific trends for property leasing in Melbourne at the moment. And I think everyone would agree that when it comes to knowledge of the changes coming through in the RTA, there is no one that knows more than Sam Nokes. So that request and certainly the option for Sam's time is there for our customers and clients. We're here to ensure that we can advise you and give you the best possible advice moving forward as to your obligations, but also how we can maximise your investment property. We appreciate that it's been a very interesting 12 months, albeit we talk about from, I'm involved in the whole business, but the selling part of the business that maybe I spend a little bit more time in is a more vibrant environment, and the leasing space has suffered some adjustments to rent, and that's been based on a supply and demand factor. It's been based on obviously an economic factor, and there's going to be some challenges around seeing those deficit in rental return, but there's some great insight from our group as to how we can maximise the returns on your investment property. So I really want to thank everyone for joining us. I want to thank you for your custom. I always say we really do appreciate your support. We're here to add value to your property experience, and we want to continue to do that. So the door is always open. This is a very one-way communication today. We're interested in having two-way conversations. So if you'd be keen for a coffee, a catch-up, a chat about what's happening more broadly in any sector of the business that we operate, we'd really love to see you. And thanks for joining us this evening. I'll let you close off, Sam. Thank you.